You think you're netting $200,000 from your home sale. Then closing day comes and suddenly you're walking away with $175,000. What happened to the other $25,000? Hidden costs. Costs that most sellers don't know about until it's too late. I'm a licensed real estate and business advisor in California and have seen too many sellers shocked by how much they actually pay when selling their home. So in this video, I'm going to walk you through the 5 hidden costs that eat into your proceeds so you can plan accurately and avoid surprises. Let's dive in. Here's how it works. The county charges a base transfer tax of $1.10 per $1,000 of sale price. So if you sell your home for $1 million, the county transfer tax is $1,100. But then many cities add their own transfer tax on top of that. In Los Angeles, it's an additional $4.50 per thousand. So on a $1 million home, county tax is $1,100. City tax is $4,500. A total is $5,600. Now, in a normal transaction, buyer and seller split this cost. So you would pay $2,800. But in some cities, the seller pays the full amount. And here's where it gets expensive. Some cities have much higher transfer taxes. Culver City, for example, has a tiered structure starting at 0.45% of the sale price. On a $1 million home, that's $4,500 just for city on top of the county tax. But it goes up from there, reaching to 4% for properties over 10 million. Santa Monica actually starts lower at 0.3% for properties under $5 million. So on a $1 million home, you would pay $3,000 in city transfer tax. But for luxury properties over 8 million, Santa Monica jumps to 5.6% on it's one of the highest in California. So depending on where your property is located and what price range, you could be paying anywhere from 3,000 to tens of thousands of dollars in city transfer taxes alone. Most sellers don't budget for this. They find out at closing. Hidden cost number 2, property tax proration. Here's what most sellers don't realize. California property taxes are paid in arrears. That means when you pay your property tax bill in December, you are paying for July through December, the past 6 months. So if you sell your home in March, you have lived in that home from January to March, but you haven't paid property taxes for those months yet. Those taxes are prorated at closing and you pay them. On a $1 million home with a typical property tax rate of 1.25%, annual taxes are about $12,500. That's roughly $1,040 per month. If you sell your home in March, you owe about $3,100 in prorated tax. That gets deducted from your proceeds at closing. Most sellers forget about this because they're used to paying property taxes twice a year, not thinking about what's owed when they sell. So they get their closing statement and see $3,000 for property tax proration. They're surprised. Just know, if you are selling mid-year, you will owe prorated property taxes for the time you have lived there since your last payment. Factor that into your net proceeds. Hidden costs number 3, HOA fees and clearances. If you live in a property with a homeowners association, there are several costs at closing. First, you will owe prorated HOA dues for the current period, similar to property taxes. If your HOA dues are $300 a month and you sell mid-month, you owe $150 for the half month. But the bigger surprise is the HOA clearance and transfer fees. Many HOAs charge transfer fee $200 to $500, document preparation fee $100 to $300, clearance letter fee $50 to $150. So you're looking at $350 to $950 in HOA related fees just to sell. And here's the thing that really surprises sellers. If you are behind on any HOA dues, have any violations on your property, those must be paid before closing. I've seen sellers discover at closing that they owe $2,000 in unpaid HOA dues plus late fees they didn't know about, and the sale can proceed until it's paid. So if you live in an HOA, get a current account statement from your HOA at least 30 days before you plan to list. Make sure you're current on everything and budget for those transfer and clearance fees. They add up. Hidden costs number 4. Mandatory inspections and repairs. Depending on where your property is located, certain inspections are required by law. For example, if your home was built before 1978, you must provide lead-based paint disclosures. If you have a septic system, many counties require a septic inspection and certification before closing. If your property is in a wildfire zone, some lenders now require wildfire mitigation inspections. And here's the big one for older homes: seismic retrofitting. If your home was built before 1978 and hasn't been retrofitted, some cities require the sellers to either complete the retrofit or provide credits to the buyer. Seismic retrofitting can cost anywhere from $3,000 to $10,000 or more, depending on the home. Then there are the inspections buyers request during their due diligence period. Even if you're selling as is, buyers often find issues during their inspection that they want you to fix or credit. Common issues include roof repairs, $500 to $5,000, plumbing leaks, $300 to $2,000, electric upgrades, $500 to $3,000, HVAC repairs, $500 to $3,000. Not all of these are mandatory, but if you want the sale to close, you may need to address some of them. Budget for at least $1,000 to $5,000 in inspections and repair costs, depending on your home's age and condition and location. Hidden costs number 5, capital gains tax. This is the big one that catches people off guard, especially if this isn't your primary residence. Here's how it works. If you have lived in your home as your primary residence for at least 2 of the last 5 years, you can exclude up to $250,000 in capital gains if you're single and $500,000 in capital gains if you are married. But if you don't qualify for this exclusion, for example, if this is a rental property, vacation home, or you haven't lived there long enough, you will pay capital gains tax on your profit. Capital gains tax rates range from 15% to 20% at the federal level, depending on your income. Plus, California charges state capital gains tax at your regular income tax rate, which can be as high as 13.3%. So let's say you bought a rental property for $500,000 and you're selling it for $1 million. Your capital gain is $500,000. Federal capital gains tax, 20%, is $100,000. California state tax at 13.3% is $66,500. Total is $166,500. That's over 30% of your gain going to taxes. Most people don't realize this until they talk to their accountant after the sale. If this is a rental or investment property, talk to a CPA before you list to understand your tax liability and explore options like 1031 exchange to defer those taxes. So there you have it, 5 hidden costs when selling your California home. 1, transfer taxes, $5,000 to $10,000 depending on your city. 2, property tax proration, $1,000 to $5,000 depending on when you sell. 3, HOA fees and clearance, $350 to $950. 4, mandatory inspections and repairs, $1,000 to $5,000. 5, capital gains tax, 30% of your profit if it's not your primary residence. Add it all up, and you could be looking at $20,000 to $50,000 or more in costs you didn't budget for. The key is to know these costs before you list, not when you are at the closing table. To know exactly what you will net from your home sale, I can run the numbers for you. Click the link in the description box below. Subscribe to my channel for more real estate tips that help you make better decisions. See you in the next video.